Welcome back, traders. Thanks for joining me here today. In this short video, I will show you how to implement the probability cones indicator to build a powerful trading strategy in the market. I will also show you my 100 times backtested result in a row based on the probability cones indicator trading strategy concept. What's the probability cones indicator all about? A probability cone is an indicator that forecasts a statistical distribution from a set point in time into the future. This indicator plots a standard deviation curve designating ranges within which prices are predicted. To apply the indicator on the chart, type the probability cones and select the probability cones EP by Joe Baus. As we can see, this trading indicator is an overlay trading indicator appearing on the price chart. Let's right-click on the trading indicator so we can learn more about this trading indicator parameters. Navigate downward and select the Settings option here. Selecting this will pop up the Parameter Settings tab. Under the Input option here, we can see the components which make up the probability cones indicator. Here are the cone settings: the source, deviation, bar lookback, and bar forecast. Here are the anchor settings. Here's the number of bars to position the probability cones. As we can see, it's 20. Here we can set the cone's origin to begin at a specified time frame. This date setting would update the cones automatically as the new period begins. This is the cone's mean dotted line setting, which is the orange color here. The default width is 2, and the mean calculator is auto by default. Here are the first cone settings, which are the two green colors upper and lower here. This is the second cone setting, which are the two blue colors upper and lower here. This is the third cone setting, which are the two red colors upper and lower here. How does this trading indicator work in the market? First, there is an assumption that the distribution starting from the cone's origin here is based on the number of historical bars sampled. And this is likely to represent the distribution of future price. Price movements typically hang around the mean. About 68% of price stays within the first deviation cones. These are the upper and lower green cones. About 95% of price stays within the second deviation cones. These are the upper and lower blue cones. About 99.7% of price stays within the third deviation cones. These are the upper and lower red cones. When price is between the first and second deviation cones, there is a higher probability for a reversal. However, a strong momentum whereby price is above or below the first deviation can indicate a trend where price maintains itself past the first deviation. For this reason, it's recommended to use a momentum indicator alongside the cones. There is no mean reversion assumption when price deviates. Price can continue to stay deviated. It's recommended that the cones are placed at the beginning of calendar periods, like month, week, or day. Also, be mindful when using the cones on various time frames. The lookback setting, which selects the number of bars back to load from the cone's origin, will load the number of bars back based on the current time frame. How can traders use this indicator as a trading strategy in the market? Traders' direction of anticipation would be determined on 3 factors on how to react when price goes beyond the second deviation. 1. If you are holding a losing trade and price has moved past the second deviation as the example here, it could be time to stop trading and exit. 2. If you are holding a winning trade and price has moved past the second deviation, as the example here, it would be best to look at exit strategies to capitalize on the outperformance. 3. If price has moved beyond the second deviation and you hold no position, as we can see here, then do not open any new trades. Now that we have known how to effectively implement the probability cones indicator for trading setups in the market, it's time we proceed to my 100 times backtested trading result with the probability cones indicator trading strategy concept based on the 4-hour time frame on the USD paired against the Japanese yen chart. Here's my trading result after executing 100 trades for 5 days in the Forex market with the probability cones indicator trading strategy concept based on the 4-hour time frame of the USD paired against the Japanese yen chart. I implemented the 1-to-3 ratio. On each trade, I risk $1,000 for a profit target of $3,000. That was on 100 trades for 5 days. I got 50 wins and 50 losses. My record of most consistent wins in a row is 5, and most losing streak in a row is 5. The gain on the trading account is 15%. As we can see, a 50 win and 50 loss trading result gives an average probability winning result. Therefore, in order to have a high winning probability with this trading indicator, it's recommended to use a momentum indicator alongside the cones. Make sure you practice this trading strategy on a demo account before applying it to trade on a live trading account. Also, ensure you implement proper risk money management when trading with this trading indicator.